Amid rising inflation, people's understanding of investment is increasing. Most would agree with me that when you're investing money in any instrument, an investor has two things in mind: security and good returns. While there are schemes that might not assure you both of these things, but if you're a risk-averse investor and you do not want to take any kind of risk when you're investing, then Post Office has many such savings plans which assures both security as well as good returns. A number of savings schemes are offered by branches of the Post Office across the country. Like any nationalized bank, the Post Office has been a trusted place for depositing as well as transacting money. So if you're looking for an investment avenue which is safe and secure, ensures substantial returns with a short lock-in period and is absolutely risk-free, then you should definitely consider investing in Post Office Monthly Income Scheme. Well, Post Office Monthly Income Scheme is not very well known among investors in the urban parts of the country. The population in urban India looks to invest in fixed deposits and other debt options for generating monthly income or even to just park their money. But the monthly income scheme offered by the Indian Postal Service, although which is lesser known, offers a banquet of benefits to the investors. It should be noted that the Post Office is still one of the largest banking service providers in the country. As it is governed by the Ministry of Finance, it is also associated with greater credibility than any other investment avenues. So what is Post Office Monthly Income Scheme? Well, as the term suggests, Post Office Monthly Income Scheme is a monthly savings scheme which is regulated by the Department of Post. It intends to provide a monthly income for small and medium individual investors in the form of interest during the term of the account. Now, this scheme promises the investors a guaranteed return at 6.60% per annum in the form of fixed monthly income. Now, the next question is, who should actually choose to invest in Post Office Monthly Income Scheme? Well, this scheme is suitable for those investors who are seeking or who is looking for fixed monthly income, but are also unwilling at the same time to take any kind of risk with their investments. Thereby, it is more favorable for retired individuals or senior citizens who have landed into no more paycheck zone. Also, investing in Post Office Monthly Income Scheme becomes quite helpful post your retirement as you earn your monthly income, and thereby you do not have to depend on any individuals for your expenses. Investing in this scheme helps you to ensure a regular cash flow even after your retirement. Next, this scheme also is suited for investors who are seeking a one-time investment to serve the purpose of getting a regular income to maintain a lifestyle. Next, it also suits investors who are willing to make a long-term investments. And lastly, this scheme is also suited for middle and low income group investors who can look at this Post Office Monthly Income Scheme as a tax saving option as well, because one can claim income tax exemption under Section 80C of the Income Tax Act on one's investment in this scheme. So how does this scheme actually works? Well, making an investment in Post Office Monthly Income Scheme is very easy and very simple, and it requires minimal documentation. To get started with, you need to first open an account. Now that can be either individual account or a joint account. Now you can start by investing a minimum of just ₹1,000, and in a year, one financial year, you can choose to invest a maximum of ₹4.5 lakh. While on the other hand, let's say if you're choosing to open a joint account, then in such a case, the maximum investment you can make towards this scheme is ₹9 lakh in one single financial year. Now, you need to remember here is that when you're investing in this scheme, it comes with a lock-in period of 5 years. Now, when you're investing in this scheme, then the money can be withdrawn in two ways. Either you can withdraw the invested money directly from the post office, or the second option is you can get it credited to your savings account through ECS. The money is usually meant to withdraw on a monthly basis. However, the investor can let it accumulate over a few months and then you can withdraw the over lump sum. But that will not fetch you much interest anyways. Now, to make a post office monthly income scheme more effective at yielding returns, then a new feature was added to it. Now, how this basically works is that the investor has the option to combine it with the recurring deposit, wherein the interest that you earn on a monthly basis, it can be invested in the recurring deposit. Now, this in turn will let your money grow even more money. Now, this concept is of power of compounding, wherein the interest earns more money for you. Now, you can ask me another question, that is, why should you choose to invest in this scheme and not other monthly income scheme? Well, now with the help of a table, let's understand the difference between them. So if you look at the chart here, the first one is if you had invested in post office monthly income scheme, then here you get an assured income at the annual rate of 6.6%. Wherein if you had invested in mutual fund, then it would have been divided in 20-80 ratio of equity debt, and hence there is no kind of guaranteed income that you can look forward to. And lastly, if you had invested in say monthly income insurance, then here you will surely get monthly annuities, but that will instead be based on the premiums and the period. The next one is if you had invested in post office monthly income scheme, then no kind of TDS. If you choose to invest in mutual fund monthly income, then TDS will be applied. And lastly, monthly income insurance, for that annuity will be charged. The next one is if you invest in post office monthly income scheme, you definitely get fixed return rate. Whereas for mutual funds, there is floating rate. Again, that will depend on the market movement, and based on that you get the returns. And lastly, for monthly income insurance, there is no kind, this is not applicable. The next one is if you choose to invest in post office monthly income scheme, it is low risk and it is suitable for risk averse. And if you choose to invest in mutual fund, then it is this kind of investment venue is suited for those people who comes with a high risk appetite. And lastly, if you're investing in insurance, then you get a double benefit of investment as well as insurance. Next, if you're investing in post office monthly income scheme, then if you choose to withdraw certain kind of the invested money, then after a period of say 12 months, you are allowed to withdraw money, which is after a year. However, that will come with certain penalties that will be levied. Since this scheme is 5 years, you need to complete the entire 5-year period. However, investing in post office scheme also gives you the option of withdrawal after a year. Next, if you invest in say mutual funds, then here the exit load will be applicable if you're withdrawing the invested amount before time. And if you look at the last column, if you invest in insurance, then here there are high surrender charges as this is a long-term investment. And lastly, if you look at the investment limit, then post office monthly income scheme lets you invest. If you are opening an individual account, then the maximum you can invest is rupees 4.5 lakh per annum. And if you are opening say a joint account, then the maximum you can invest in one financial year is rupees 9 lakh. While on the other hand, if you invest say in mutual funds or even in insurance, then no kind of investment limit is applied here. Now let's understand who can actually open this account and how can you open this account. So to open a post office monthly income scheme account, let us first go to Google and type post office monthly income scheme account opening form download. There you click on the first link which reads Forms India Post. As you click on the link, you can clearly see there's a lot of forms that you can choose from. So slowly scroll down and get to application form for opening of account. From here you can easily download the form, and remember this is under savings bank. So as in how you click and download the application, you can see the first part of the form consists for the use of post office only. So you do not put in any of the inputs in the first part. Let us scroll down and see. As in how you scroll down, you can see there you need to put in your information, which requires you to put in your name and the type of schemes that you want to open. That is it for savings, MIS, RD, etc. So the first part of the form consists or asks you to put in the information of the applicant, and in case of a minor, then the information of the minor should be put in too. So as in how you scroll down, you can see the third part which consists of the declaration. So remember that when you fill in the form, read this declaration completely and then proceed further. And lastly, there is nomination. Remember, you can appoint any of the nominee or the legal hire who will be entitled to take all the deposited amount in case of an unfortunate demise of an account holder. So here the number of nominee could be any, that is 1 to 4. So this part of the form requires you to put the information of the nominee. And so your form application ends with signature or thumb impression of applicant or applicants or guardian. The last part is again for the use of post office only, so do not touch this. So now with the help of a calculator, let's estimate how much of investment if you make and how much of monthly income would you be earning from that investment that you choose to make. Okay, so let's go to Google and type Post Office Monthly Income Scheme Calculator. Now, if you look at the calculator here, it says the invested amount here is rupees 1 lakh. The rate of interest you get is 6.6% per annum and the lock-in period is 5 years. Now, let's say you had invested the maximum of rupees 4,50,000 and the rate of interest is 6.6%. Lock-in period is 5 years. Now, the monthly income you will be earning from this invested rupee will be rupees 2,475. Now, if you had invested a lower amount, let's say 3 lakh, and the rate of interest you're earning is 6.6% for the lock-in period of 5 years, then your monthly income would be rupees 1,650. Take for another example, and let's say you had opened a joint account. Now, if you had invested rupees 9 lakh in a joint account, and that would mature after the year of 5 years, and the rate of interest you would get is 6.6%, then your monthly income would anywhere be rupees 5,000 from that investment. The monthly income scheme is surely an effective investment tool that effectively deploys the capital to earn guaranteed monthly income for you throughout the investment tenure. Moreover, it comes with an infallible backing of the government. No wonder Post Office Monthly Income Scheme is an all-time favorite among old age, retired people as well as risk-averse investors. Now, before you go ahead and invest in any kind of investment schemes, it's very wise that you have an in-depth knowledge of that particular scheme. So, we have built a detailed course on Post Office Monthly Income Scheme that you can get access on our Financial Freedom app. So, hurry up and download our Financial Freedom app and know all about the Post Office scheme and start your financial journey. Also, don't forget to subscribe to our channel for more such financial content, and do let us know on what financial content are you willing to watch in our comment section. Do hit on the like button and subscribe to the channel, and also hit on the bell icon to get notified for our next video. Thank you for watching IndianMoney.com. Get wise, break free.